Today. This is Eric Bramlett with Bramlett Partners, and today we're going to discuss the Austin Metro real estate statistics for the month of October 2025, and we're going to compare that to October 2024 and sort of everything in between. So I hope everyone out there has had a wonderful week, and the weather finally feels like fall, like real fall, not Texas fall. So I hope you're getting outside and enjoying that. I know that I sure am. The real estate market is plodding along. There's not been a whole lot of movement, but it's still incredibly important to monitor the market. This month, I'm getting a little bit into the weeds, and we've had questions from a lot of really great agents about the resale market versus the new construction market, that resale properties do perform differently than new construction. And so I'm going to show that data to everyone, and we'll tell that story just a little bit. Then we'll get back into our normal, overall metro market statistic conversation. All that said, I'll go ahead and share screen and we'll get into the numbers. Because we're looking at total metro, new construction, and resale this month, I want to make sure and be very clear about what we're looking at with each slide. So this is the overall 5-county metro area, and this is what you will see generally whenever ABOR releases their numbers, whenever Texas A&M releases their numbers. We're looking at the total in the metro area. And this month was relatively similar to past months. We did see total sales decline by 5%, which we don't like to see, but we did expect that because we saw pending units drop in the month of September. Good news, under contract pending on par with 2024. So we saw a very slight uptick of 0.7%. New listings crept up quite a bit by 10%, bringing total active listings to 11.9%. We'll talk more about pricing in a moment, but pricing remains stable. We're seeing 3 out of 4 indicators this month going up slightly. Average days on market increasing to 89 from 80. And then MOI, months of inventory, increases to 5.3 MOI in 2025 versus 4.7. Not hugely impactful, but it just does show that we are seeing more listings sit, and there are more listings out there than there are buyers for those listings. So on to sort of the interesting numbers. And this is when I dug in and said, okay, if we carve off all of the new builds, which means predominantly like the Lennars, the DR Hortons, things like that, then what do the numbers look like? Total sales declined by 8.3%, so a bigger decline than whenever you're looking at the total market. Under contract and pending declined by 4.8%. New listings relatively the same, and then here's where it changes again. Average sold price increases by 8%, median sold price by almost 5%, average sold price per square foot by 4%, and median sold price per square foot by 1.4%. And average days on market increased by more than the overall market. So it jumped to 86 days on market versus 73. What's the takeaway? What story makes sense here? Sellers are predominantly in low fixed rate mortgages. They have utility for the homes. They can simply live there or they can rent it out if they don't get their price. So we're seeing price stick a lot more on resale than we are on the overall market. Whenever we slice it up into only new construction, which I've never done before, it tells the story a little bit further. So total sales in the month of October 2025 increased by 13% for new builds. Under contract pending increased year over year by 22%. New listings are up 9%, and active listings are up 21%. Pricing. Builders are more aggressive on pricing. So you'll see the average sold price declines by 2.6%, median sold price declines by 4.6%, and then the days on market went down. They went down from 111 to 99. Months of inventory went down from 5.7 to 5.4. Why is this? The builders are in the business of building homes and selling homes. They will operate as long as they're not losing money, and sometimes they'll operate at a loss simply to keep the team together. New home builders will be much more aggressive whenever it comes to getting their homes sold. Whenever we compare new builds to resale only, you can see total sales, new builds increased by 13% while resale dropped by 8%. Under contract pending increased by 22% while resale dropped by almost 5%. With drawn and expired listings, we have a 19% drop in new builds versus a 0.7% drop on resale only. And then here again is where it gets interesting. New build average sold price drops by 2.6%. Resale increases by 8%. Median sold price drops by 4.6% on new builds while it increases by 4.6% on resale. Average days on market on new builds drops by 10.5%, while it increases by 17.3% on resale only. Still doesn't tell the entire story because builders offer a lot of incentives. So whenever we see builders advertising like a 4% interest rate, how do they do that? They're buying down the rate and they're spending a lot of money to do so. So this is a chart that Lennar published, I think almost 6 months ago, and it shows their historical percent of total revenue that they're offering as incentives. And they're almost at an all-time high at 13.3%. So our home sellers, the resale sellers, are generally paying 7.5% in closing costs. Builders are paying almost twice that in the way of incentives, in the way of rate buydowns. So even whenever you see these sold prices, just know that the builders are cutting even more deeply than that. What it means for us, what it means for our clients is that if we are in these neighborhoods that are close to production builders, it's really tough to compete with them. And we have to be very, very mindful of that. Okay, so I've gone off on that tangent, and now we're going to curve back to our traditional statistics. And this is the overall market again. This is the entire 5-county metro area that includes both resale and new construction. What does this look like? Volume sold ticked up just very slightly in the month of October by 0.44%, basically flat. That brings us year to date at -2%. What this shows us is there is less demand in the market this year than there was last year, just by a very, very small amount. More than anything, my takeaway is that we are simply not recovering yet, and we are plodding along, sort of skipping across the bottom, just waiting for Austin's local economy to improve so that we'll see the local housing market improve. Buyers and sellers always want to know, is it a good time to buy? Is it a good time to sell? It can't be both. Personally, I think that buyers and sellers are asking the question, is it a safe time to buy? Is it a safe time to sell? Yes, it is. If you're looking at price is almost entirely flat over the past 12 months. Increases just slightly on average, increases just slightly on median. If you zoom out a little bit further and go to 24 months, same story. Almost entirely flat over the past 24 months, a little bit up on average, a little bit down on median. Does this mean that it's a safe time to buy if you're a buyer? Yes, just make sure that you will be in the home for at least 5 years. More than likely, you will be there for 8. That's the average. Is it a safe time to sell if you're a seller? Yes, you will probably not see prices decline other than normal seasonality. And if you need to sell your property, you just need to be very realistic with pricing and preparation. Make sure you hire the right realtor as well. Got to put that plug in there. Seasonality is very impactful still. So new listings by month are following normal seasonal trends. We did see an uptick in October. We don't expect that trend to continue. It was still very close to 2024. And then most importantly, if you look at pending units by month, we are following the historical trend line very, very closely. This is 2024. It'll also look just like this if we look at the 10-year average. What this means for buyers is that you will see fewer properties to choose from between now and next spring. What this means for sellers is that you're going to see demand continue to decrease between now and next spring. Next spring, March, that's whenever we'll see buyers enter the market again. We'll start seeing sellers enter the market at that point in time. And it all makes sense because we're looking at the holidays and people just don't like to buy or sell homes around the holidays. They're thinking about other things. National indicators. So we're going to back way out now and we're going to talk about some headwinds. This is the University of Michigan consumer sentiment, and you can see that it continues to decline. So we had a low in April and May. This is whenever the tariffs hit. And then recently, because of some national economic news, consumer sentiment has gone even lower. This is a bit of a surprise. So they forecast that it would be on par with October, and it actually came in lower in November. So in Austin, we have been in a local economic recession now for almost 3 years. And it is as though the national economy is now kind of catching up. That's not necessarily good news or bad news, but it doesn't tell me that we think things in Austin are going to get worse necessarily. It just means that we're going to start seeing, the narrative in the national media change. And whereas in the past, we didn't see a lot of national stories talking about, a bad job market, we have seen that now. And that is almost good news because it means that the Fed will react, or they should react. This is another indicator. This is a measurement of the stock market. So is the stock market bullish or is it bearish? Is it fearful? Is it greedy? Right now it's in a position of fear, and it has been for over a month now. The previous close was extreme fear, actually. What sort of tipped everything into this was the government shutdown, which thankfully just ended. But right now the stock market remains fearful. It is more of a sell-off than it is a buy. Moving along to mortgage rates. So mortgage rates will be a bit of a tailwind. And this shows us the past 90 days where the high was 6.62. We're currently at 6.34. We'd like to see that get lower, may or may not. It really depends on the bond market. But as long as we continue to see this sort of gradual decline in mortgage rates, we should see that help us just a bit. Job postings in Austin will be one of the most impactful numbers, and we're not seeing this in the news a whole lot. But Austin has been in a pretty severe job shortage now for 3 years. We finally have seen the number of Indeed.com job postings start to increase. It was in decline for like 30 months, and we have now seen that turn around. That doesn't mean that we're in a recovery just yet. Whenever you look at the historical trends since January 2022, it shows you that we're sort of at this trough right now. But it is starting to peak up just a little bit. What that tells me is that things will likely not get worse. We just need to wait and see when things will get better. If you've made it this far, thank you for sticking with me. I know I went off on a bit of a tangent whenever we sliced up resale and new construction. Is a really good example that, you know, it is a example of just how hyper-local real estate is. Whenever you look at your specific neighborhood, if you're in an area that has a lot of new construction, you want to make sure and carve that off. If you're in a historic neighborhood, there's no new builds there. You still want to look specifically at that submarket. And then real estate's also very hyper situational, meaning your specific situation will have a unique strategy versus somebody else's in the exact same neighborhood. And that's where we come in, because we love helping our clients strategize. We love helping our clients get the best outcome that they possibly can. We also love helping our agents come up with the best business plans that they possibly can. So if you'd like to talk about any of these things at all, please reach out to me or reach out to us. You can always find my information in the description, or you can just Google us, and I'd love to chat with you, and I'd love to help you, and our agents would love to help you. And we're not in a great market, obviously, but it doesn't matter. We can still help everybody succeed and meet their own goals. So thanks again for listening. I'm Eric Bramlett with Bramlett Partners, and I hope that you have an amazing, amazing day.